Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 17th of May. So I've seen some very important levels hit on the currencies and also the indices, where the S&P500 has made another all-time high this week. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that we've hit that very key resistance point at around that 66.80. It's a very strong level. It has been for a while, really petering on the edge of testing it. It's finally got there on this particular move. The waves are very even. Like we do talk about the waves being even for the projection, and you can see that this move here to there is about the same as that move there to there. So really, it's already, aside from the fact that it's actually waving evenly, it has hit a pretty key resistance point. Now, look, when there's a lot of action here, there was a lot of support right through there for about 2 weeks at this level. Now, it obviously had a big doji candle, tried to go higher, tried to go lower, but ended up effectively at the same spot, which is what the doji is indicating. What we're looking for here is really either a reversal down below that basically the 66.50 area here, below that doji, and at that point we'd push down to around that sort of 66-cent mark as the next form of support. Or if it does get itself back up above that 66.80 level, then we're going to start looking at a real, like a proper move back up to around that sort of 68.80 area. Very, very possible that once it does get a bit of a run on, it can do that. It runs very quickly, the Aussie USD, but we've got to really wait for confirmation. In my mind, we need a daily close at least above 67.20 in order for that to happen, because we need to get above all of these wicks here. So whichever way it goes, I'm happy to trade this one. If it breaks up to the high, we can look for moves up to around that sort of 68.50 to 68.80. But if it does roll over here and closes below the 66.50 on a daily, I'd be happy enough to short it down to that low 66-cent mark. So pretty good trading on the Aussie, and hopefully you're able to get hold of some of that. All right, we'll move over to the US dollar CAD now. And you can see it hit the support level that is well documented, obviously around that sort of 135.90 to 136 level. It hit it there over the last couple of days. It's trying to stay above it. It's a very, very important level here. You can see we've got a lot of resistance right through there over many, many months. So realistically, if it's going to stop, this is the place it's going to stop. If we're going to break below this level here, generally speaking, I think 135, the middle of this channel is the next zone, really. You can see a lot of price action right through there, a lot of resistance there and support at that level there. So that 135 area, 135.30 is the level that I'd be going for, the middle of this green channel. But it's got a very, very heavy resistance band at this 136 where it is currently now. So if we do get a daily break below that, it is a big deal, but we'll see how we go. It's obviously trying to rally at the moment. If we see a series of higher highs and higher lows on the smaller time frame, I'd be looking for the 20 moving average as the first port of call. I'd be looking for scalping moves up to there, 40 or 50 pips up until that level there. And if it breaks through the previous level at around the 137 will be the target. But it is a very, very important zone for the CAD at the moment, so we'll keep a very close eye on that one. All right, US dollar yen. Look, interesting sort of week. We saw a little bit of weakness over the last few days. It did try to rally again. What it does now is going to really probably tell us the future for the yen in the short-term future anyway, in the sense of which direction it's going to go to. Because if it fails to make a new high here at 156.50, and actually starts to progress lower, that's going to be a failed swing. So you can see we've already hit the extreme highs. It's come back down to a good level, the level we wanted for a short, which is great, but it's actually failed to reach that high again. Okay, so the fact that it's rolling over here, it is trying to rally off this point, but where it ends up is going to be extraordinarily important. If we get a daily close above the 156.60 to 80 area here, then we can look at starting to place trades up to the previous highs. But if it fails to make that high and closes below the 153.80 to 154 level, then we're going to start targeting that 152 again. And at that point, if that level gets broken, then that is a confirmed failed swing, which basically means that long-term trend that has been in play for a long time is over, and it's starting to obviously do the lightning bolts. That'll be a massive lightning bolt on the way down, of course. So very, very important zone. I think that if you're wanting to scalp it, I'd be trading in between the two previous weeks zones of 153.50 and that 156.80, which is a very big zone anyway. So there's plenty of room to move inside of that area. But a daily close on either side of those zones is going to be very significant, and it will tell us a lot about where we're moving to with the yen. All right, over to the dollar index now. Obviously, very, very strong support. It did what we needed it to do in the sense that 20 moving average held it down, got down to the 104.20, which was the target. It went a little bit lower. I think it got down to about 104.10 or something like that. But look, the 104.20 was the key zone here. It found support there. It needs to. It wouldn't want to be going any lower, because if it does, there's significant moves down, which is going to spell obviously strength for the euro. We'll touch on that in a second. But good move down to the 104.20. If we rally from this point here, I'd be looking for moves back up to the 105 on the long side. But a daily is below that 104.20, and then 103.50 is the next target for the dollar index. So definitely found strength at this support zone here, which we would have expected, because if it didn't stop there, we could see quite a decent sell-off on it. But the euro is the one that you'd probably more than likely trade. Big swings, and it's been very, very powerful all the way up. So we saw a little bit of weakness here at the 108.80, nearly reached the 109, but it's weakening a little bit here at very strong resistance. No real surprises there. But realistically now, we're probably going to see a bit of a rollover, maybe a little bit of weakness back down to the moving averages, mainly because, yes, the dollar index is looking a little bit strong from that base. But I'm still relatively comfortable that if we see weakness in that dollar index, this is going to, have a really good chance of getting to the 109.50 relatively comfortably. This could be just a bit of a pause zone. It has broken this resistance. So if we do get a little bit of action around this level here, and we start to see a bit of a push up, then I think we're a decent chance to get to the 109.50. But if we roll over at this point here and start to weaken, we see a series of lower highs and lower lows on a smaller time frame, I'd be aiming for the 20 moving average, which is around that sort of 108 level on the euro. All right, now we'll move over to the star of the show, the S&P 500. This hit the new high this week, only yesterday. You can see that we reached, even today, it actually reached a new high, but it actually didn't close there at 53.23. Or 53.25. Big move, obviously. We've seen a massive move out of this area. It's at a very precarious zone. Look, I'm not a big fan of getting long at an area where we've just gone into an all-time high. So I'm always treating these as a scalping opportunity more than a longer-term swing trade. If we see weakness at this point here, I think it's an obvious pullback down to, in the first instance, 20 or the 52.50 area, and then at a stronger base, that 5200 area, which is this red line here. We can see the 20 moving average. You could sell down there, pretty quickly. Obviously, like, this does move fairly fast. But credit where credit's due. We got there, and we have to respect this level, of course. So we don't want to be, I wouldn't be jumping in on the shorts and thinking it's going to just sell off completely. We don't really know what it wants to do, but it will more than likely pull back. From this zone, it's quite often the case that when it does reach a new all-time high, it does retrace a little bit, get a little bit of consolidation. That retrace could be anywhere around this sort of 52.50. That would be a really good level, actually. I can pop a line there for it. That's where the previous resistance was. Now that it's broken through there, a little bit of a test of that level there would be actually quite a good trade. But you wouldn't want to be just jumping straight in the long. You'd obviously want to look for a series of higher highs and higher lows on a smaller time frame, and then you've got something to aim for straight up, obviously the previous high, which is 53.25. And if it breaks that level, then we're starting to get interested again on swing trades up. But of course, if it fails to hold at the 52.50, then you're looking back down to the 5200 and 51.50 as the potential move on the weak side. I'd be a little bit careful around going too long on this one. If you're scalping long, just keep your stop losses relatively tight, because I'd be treating it as a trading opportunity from a scalping standpoint rather than a longer term or a bigger swing trade when they're at these levels. But good trading anyway, and I know a lot of people got this trade up to the 5,300, so well done on that. All right, everyone, thank you so much for joining us this week. We've had a great week's trading. I think all of our levels that we talked about last week were hit, so hopefully you're able to take advantage of some of those, and we are starting to see some good movement in all of the things that we cover at the moment. So yeah, it should be some good trading in the next couple of weeks. Have a great weekend. I look forward to seeing you all next week.